Hey guys, welcome to the deep dive. Today we are going to be going through a stock like normal, and we're going to be going through a stock called ACH. So let's go over to my screen. All right. ACH, Aluminum Corporation of China Limited. So this is an international stock. Let's make sure I'm in the corner. Yeah, okay. So they manufacture and sell aluminum out of the People's Republic of China. And they are headquartered in Beijing, and they started in 2001. We're going to be going back to 2006. Now, in 2006, there was a boom in aluminum prices. As you can see from this Trading Economics website, aluminum prices, they went from a low in 2002, about 1,200, up to a high of almost 3,000, at which point the housing crisis hit and aluminum prices tanked into early 2009. Now, this boom was fueled by, it was called the raw material boom. I don't know if you can see this, but it's called the raw material boom, and it really happened because of construction and just the expansion in the economy that was being fueled by that Fed bubble into all things housing. So let's get into the chart here. All right, this is what we're working with. 2006 started here, and we are in August of 2006. Now, looking at this chart, first up, I think, let's get our little pointer out here so that we can see everything just fine. So first thing I see when I'm looking at this chart is it's very jumpy, like most international stocks. You know, it's not opening and closing very close to each other, but I like how orderly it's moving up here. Like, this is a very orderly, you know, it rises, goes sideways for a while, rises, went sideways, and then it's coming down. And so it's actually trading very orderly, even though it is jumpy. ADR during this period, which is right over here, is 2, 3, 1 back here, 3, 4, gets to 4 briefly here. So you know, might be another one of those lower volatility plays that we are going to be doing here, but, you know, we're just going through the alphabet. We're in A's. And so the Aluminum Corporation of China is next. So let's zoom in and kind of start going bar by bar. This is the main market. In 2006, we're kind of having a lull here. But let's start going through bar by bar and seeing what we can learn from this. And because it's 2006, we're not going to be able to go back and look at individual days. We're not going to be able to look at news stories from that time. I checked on Seeking Alpha. I think the earliest news stories is at the end of 2008. So maybe we'll get there and we'll look there. So let's start going. As you can see, we're below all the moving averages, and we're just going sideways. But we're coming up. Well, had a high volume day here. Maybe this was a nice flush out day. Maybe we'll get some bullish action off that. Overall, we kind of have, do we have like this kind of downtrend line, something like this maybe? Perhaps we can extend this to the right and see if maybe a break of that is, all right, so I just broke it there. So as you can see, sometimes, you know, people who use trend lines, people who use moving averages, it all coincides because, look, as it's breaking through this trend line we just drew, it's also breaking through all these short-term moving averages. This 200 is still like a wall above it, so probably not going to get involved until it gets over there, but you never know. Let's see what happens. The main market is very strong, going up. Pretty nice sideways action here, actually. This is not a bad little flag. We're up 16%, so this is definitely a slow mover. You can kind of get a better idea if I lengthen it there. And that would be the breakout day. So potentially you could have bought on this day. High volume, breaking out to the upside. Pretty nice. Let's see what it does. Yeah. Had some good follow through on that. Above the 200. Now pulling back kind of hard. Had a high volume day here right around the 200. Not sure what happened. Maybe some news. The market itself gapped up on that day. So could be that the volume isn't necessarily related to this stock, more related to the main market. but the volume keeps coming in. All right. So now we are definitely into the momentum phase. We've come about 50%, so that's pretty respectable. Our ADR is 2, 3. That's pretty nice for a 50%. And for an ADR of 2 and 3, 50% move is not bad. Now let's see, what are we looking for here? We're looking for some kind of sideways action so that we can maybe get long above these moving averages or maybe right around them. It's too extended right now to think about a trade, but man, that was just didn't give us much chance at all to get long. Yeah, those people who did get long on this day got pretty badly punished, coming back to the 20. So I'm seeing kind of this trend line here, if you don't count that. So let's see, maybe we get one more day sideways. Let's just say if we get up over 23.20, let's get long. If we gap up to 24, that's going to be really tough to get long on that. But maybe if we get 23.20, let's get long. Main market is breaking out to the upside. Volume is coming down as these little candles are getting smaller. So I like the look of this. We're still recording. All good. Okay. The low was 23.17. So let's say we got long at 23.20. We got long on that little pullback. It's riding this 10 moving average. That's really nice. I want to stop down around 23, maybe just below this tiny candle. How about just below the close of this bar? So that would have been 22.65. So 23.20, 22.65. About 55-cent risk. Let's see what we can get out of that. All right. That's an interesting bar. That would be called a bearish engulfing bar, where it opens above this candle and closes below it. So that's not a great sign for your trade, generally speaking. Okay. I'm actually happier now. We had some sell-off days, but we're not actually going anywhere. So let's see if we can... Yeah, going sideways. I want to add if it gets over 23.70. I'm going to add to our position. Yeah, buddy. Opened at 23.66. We would have added at 23.70. So we have a double position on right now. Let's take off 50% of our double position. So let's go back down to a regular position at like 24.93. It's been, long. Generally, we want to take profits in that 3 to 5 day period, but let's take profits instead at 24.85. Let's say we're going to take off half, so we're going to go down to our normal one position. Ooh. All right. So now I feel like we're in a little bit of trouble here because we have a double position on, and we're right back in the range. We could easily go down here into this and take a double loss here. So, I'm cutting 25% at the open of this next day. Yeah, okay. So 25% off there at the open around 23.25. So we're in a loss. Really not happy about that. I'm moving the stop up to 22.75. Oh, did we hit it? Low? 22.81. All right, we're still in it. Oh, that would have been rough. So this opened at 22.45. So that was actually a decent loss. That wouldn't have felt good, that's for sure. And I think going forward, I have to remember that this is really a jumpy stock. This is going to make big gaps. And so, like, if you get long here and you're thinking, oh, my stop's going to be, 24, and it opens here at 23.4, man, that's going to be bad. So definitely not going to add and take a double position. I really like this. This was looking really good, but obviously it failed. I'm expecting it to come down to 21.50 here, but let's see what happens. Oh, it feels so bad when that happens. Feels so bad. All right. Well, this is why trading is easy, guys. Yeah. All right. Making new highs. Well, let's see if we can get some more sideways action here. Whew. Look at that. Really glad that we weren't in that. So this is going to be this is a tough stock to trade. I'm just going to say that right now. We are in early 2007. This is a tough stock. Coming down, came down to the 100, kind of bounced off that area. Coming back up. All right. So what do we got here? We got kind of this big range, and we got kind of this downtrending line that wasn't great, but we could do something like that. Yeah, I'm going to get long over 25.36. I'm not going to pay more than 25.75. So 25.35 I want to get long. I'm definitely long at this point. My stop is, I feel like I have to give this more room because it's so jumpy. So my stop, I'm going to say my stop is 23.90. So 25, 35, 23. So almost like $1.40 in risk here. We'll see what happens. All right. Let's get out of 30% here at the close of the next day, which would have been probably right around our entry. So we're in a 70% position. It's right around our entry. But we're riding that 10, as you can see. All right, I'm going to get rid of the other 20% here at the open the next day. All right, very nice. So we're in probably a profitable position. We only have 50% of our position left, but we do have profit on the 20%. The 30% was probably break even. Let's see what it does. Making new highs. Yeah, this is what we want. Oh, yeah. Now we're talking. So what do we do here? Do we trail it with the 10 knowing that this thing can do like one of these? I think we got to just kind of roll with it and be like, it is what it is. Yeah, it can do that. So my stop now is below this bar on the last 50%. Oof, I'm getting super nervous. This is either going to break out to the upside or it's going to just slam down on us, I feel like. That breakout on low volume is not great. All right. I'm getting out at the open of another 20% so that we're down to a 30% position. All right. That was good. $30. So that's 5-point gain on 20%. So we got 30% left, trailing it with the 20. All right. We'd have been out there at this close. So marginally profitable trade, maybe 1 or 2 R on that one. When I say R, I'm talking about risk units. So if you're going into a trade and you're like, all right, I'm going to risk $100 per trade. If I say that's a 2R trade, like we made 2R, that means we made twice our risk. So that'd be, instead of 100, that'd be $200. If we made 3R, it'd be $300. So that probably a 2R trade, maybe a little less. And this was actually not a bad flag here. This little trend line here. We would have had, well, that's not working. It would have been only 18 bars is pretty perfect. But let's see what it does. Notice how this a couple closes below the 20 was enough to shake out some weak hands so that it could make new highs. That happens so often where it'll break below the 20, it'll close there for a few days, and then pops right back above it. It's called the wedge pop. It's a nice entry. And we are not in this, sadly. At least I'm not. Maybe you're making other trades. If you are, post them below. Let me know. Maybe I'm making bad trades compared to what you would do. The main market is going up this whole time. Our ADR is still in the 2, 3, 4 range. And overall orderliness is like a 7 out of 10. I mean, if it weren't so jumpy, this is a really nice trading stock. I mean, it keeps making these ranges, popping out, making these ranges. I mean, this is really trading well and being accumulated by institutions, which is nice. So let's keep going. I'm going to buy, maybe 34.85. Let's see how long this flag is, 20 bars. So it's long enough, but I'm getting nervous because this will now be the 4th kind of consolidation flag, which is making me kind of like, we we've run up 120%. So, but I just feel like I have to take the 24.90 trade. Let's see what happens. All right, this would have opened at 24.92. That's close enough. Like if we gapped up to 26, like I probably wouldn't have bought it, but 24.92 definitely buyable. Let's say if we're within 10 cents of our entry that we're probably going to be in, but we did make new highs, so we're very vulnerable here. I like the high volume on this breakout, but we are very vulnerable. This could slam back down easily. So this next day is going to determine a lot, I think. And we are looking great. Oh yeah. Oh yeah. Okay. Getting out of 50% on the next day open. Okay, good. I'm glad we didn't gap down. We opened at 40.9. Nice trade. 25 or just under 25 to 40, 5 points. We didn't really talk about what I was risking, but I probably would have risked more than just the low of this breakout candle. I probably would have been risking down to like 33. So maybe 3 points risk, 5 point gain on that first half. And then it looks like it's really liking and respecting this 20 period moving average compared to the 10. But it is accelerating. And one thing that is good, when a stock starts accelerating, you want to use lower moving averages as your stop because it's going to start adhering to those more. And if it's getting extended and going really fast, that when it breaks those, it might break a lot of other moving averages. So I say because it's accelerating, we'll trail with the 10. Let's see what happens. I think we have 50% left. I think that was a 50% partial profit there. So let's see if we can hold this 10 and keep going. Yeah, all right. We might have gotten stopped out on this day. 42.1 close. Let's see. 41.86. So technically would have gotten stopped out on that day. But I mean, it was so close. A lot of times when it's that close, I'll just be like, yeah, I'm just going to hold it. So we'll see. Let's see what happens. Definitely would have been stopped out that day, if not this day. So 46 on the second part. That's a 10-point gain on that. And what were we risking? Like 3 points. So this was probably a 2.5, maybe 3R trade. Not bad. And we're still running. Ooh, we're starting to get wily here. Starting to get a little volatile. Yeah. Oh, man. It's crazy how often this happens, this observation. Just from doing this, the nicest flag, the best breakout is the last one. And then it turns over, rolls over, and has because these breakouts were okay. This was all right. This one was just okay. We can do that to make it more clear. This one back here was just okay. But this one here, this was the real moneymaker if you bought on this day, man, because you made 20%, 22% in 3 days. I mean, that's incredible. And then it went up 40% in a few weeks. So this was, that was really nice. Wow, coming right back up. Holy camole. Did not give any real time to get in. Starting to make some type of range. This is some type of candle here, or some type of flag. 15 bars, pretty short. I'm probably not interested unless it puts in some more sideways days here. Like that. Maybe a couple more days before I make a decision. Yeah, that was the breakout day. Let's see how it does. I'm not super excited with all this gappy crappy. It does follow through for a few days. Wow, even more. It's following through really well. Would you have taken this? Would this have been something you took? That's a good question, because that is a high tight flag. 82%, well, almost a high tight. It's not quite 100, but that is like, look at that. Perfect. High tight flag. Boom, boom. That is pretty perfect. We're just riding that 10 higher. Okay, coming down to the 100. Let's see. Wow, we just cut right through it. No support there. And we are into the end of 2007. And that might be it, folks. This was the blow-off candle right there. I mean, that day, the stock was up almost 11%, higher volume, but not as high as back here. And that might be the end of the move. But let's see. Coming to the 200. He's got to hold the two. No, it doesn't even hold the 200. All right, we are back down into the 40s. This thing's been, from the highs, this thing's been negative 62%. I mean, this would definitely be off your radar at this point. But let's just see if we get anything else that looks all right. No. All right, I think that's that. So a little bit choppier of a stock there. Let's kind of get a wider view of what we were working with. We started back here, kind of came up, had this nice range here, and here we go. Here we go. This was kind of a funky flag. I like that it break out. Sometimes flags that look wonky actually end up working. This flag didn't work that well. It had this day where we stopped out and then it happens. It happens. Trading is hard. Then we had another not great looking flag there, but somewhat. And that one ran really well. That was a good winner. Then we had this one, which was okay. This is not bad. And that did okay. It had a little bit more follow through. And then this one was the best. That one was the best. And then it started to get wily, and it made a classically beautiful, like high type flag, which actually, I mean, if you got in the next day here, that day, that was the breakout day, that ran really well. If you had gotten out on this, if you had been smart enough as a trader and been like, this is a blow off top, and you'd have got out on that day, yeah, 30%, not bad. Not bad at all. All right. I think that's that for that trade. Thanks so much, guys, for watching. If you like this content, subscribe below, like it for me, and I'll see you next time.